Welcome to today's market snapshot for February 15, 2026. Before we begin, please note this presentation is for educational purposes only and does not constitute financial advice. Always conduct your own research and consult with a qualified financial advisor before making any investment decisions. Let's start with the carry factor, which examines interest rate differentials between currencies. Central bank policy rates currently show Switzerland at 0.75% and Japan at 0.00%, anchoring the low end, while Australia stands at 4.50% and New Zealand at 4.00% on the higher end. Looking at interest rate differentials, the strongest positive carry opportunities appear in AUD over CHF at plus 3.85%, followed by AUD over JPY at plus 3.10%. On the flip side, CHF over USD and CHF over GBP both show negative differentials of minus 3.75%, reflecting Switzerland's relatively low policy rate compared to other major economies. Moving to value metrics using USD-based real exchange rates. This measures how currencies trade relative to their long-term purchasing power parity against the dollar. The Japanese yen appears most undervalued at 1.61 on this scale, followed by the euro at 1.32. The Canadian dollar sits at 1.20, while sterling and the New Zealand dollar show values above parity at 1.08 and 1.13, respectively. The Australian dollar trades near fair value at 1.02, while the Swiss franc shows the strongest overvaluation relative to the dollar at just 0.79 on this scale. Now examining price momentum across multiple timeframes. Over the past 12 months, the Swiss franc has demonstrated the strongest positive momentum at plus 11.39%, followed by the euro at plus 6.66%. The Australian dollar shows mixed signals, strong 6-month momentum at nearly 8%, but 12-month momentum has cooled to plus 3.55%. Meanwhile, both the US dollar and Japanese yen show negative 12-month momentum at minus 7.70% and minus 9.24%, respectively. The Canadian dollar also displays negative annual momentum at minus 3.19%. Despite modest positive readings in shorter timeframes, shifting to fixed income markets, 10-year government bond yields reveal the interest rate environment supporting these currencies. Australia shows the highest yield at approximately 4.71%, with New Zealand close behind near 4.43%. The United States sits around 4.42%, while the UK trades near 4.54%. European yields are notably lower. Germany's bunds at approximately 2.23%, and Switzerland's exceptionally low at just 0.27%. Japan remains at the bottom of the spectrum, with yields near zero, reflecting continued ultra-accommodative monetary policy. To wrap up, our FX snapshot reveals 3 distinct patterns as of February 15, 2026. The Australian dollar offers the strongest carry opportunity at 3.85% against the Swiss franc. The Japanese yen appears most undervalued on real exchange rates, while the Swiss franc shows notable overvaluation, and the Swiss franc demonstrates the strongest 12-month momentum at plus 11.39%, while the yen shows the weakest at minus 9.24%. Thank you for watching.